Hey, how's it going, guys? Thank you for joining me on this week's episode of The Real Deal. So I hope you guys are having a great week. Finally, the temperature's kind of cooling down a bit for our standards of cooling down. It's been nice and overcasted lately, so that's awesome. Finally, been able to enjoy the pool a little bit because even though I have a pool, I hate going in there when it's super hot because it feels like you're jumping into like a stew, and it's just like real stew, which is really weird. Anyway, so today we're talking about closing costs. Now, closing costs comes up in every single transaction, and it's a lot more important now than what it was 2 or 3 years ago. So I'm going to explain to you what goes into closing costs, and then I'm going to explain to you why it's very important and how it can affect your buying experience. How you can go from getting your offer accepted like that or you're gonna have to put in a couple offers before you get your offer accepted. So first and foremost, let's talk about what is closing costs. A lot of people ask me, is that how you get paid? Is that how the lender gets paid? What is that? What is this mysterious closing cost? Closing costs is a combination of a bunch of different fees, I guess you could say, but they're all separate from any expenses as far as the real estate agent goes and the lender goes. So I'll explain. One of those is going to be your homeowner's insurance. So whenever you purchase a house, you have to purchase hazard homeowner's insurance in case, God forbid, the house burns down. The bank wants the house to get covered. So depending on how much that quote is going to be dependent on how much your closing cost is going to range. So usually, I don't know, it's $1,000 a year. Another part that goes into your closing costs is your title fees. Title companies are the people in charge of the transaction. So they're in charge of transferring ownership from one owner to the other. They're in charge of holding the money and transferring the money from the buyer to the seller. Their fees come out of your closing costs. Another thing that comes out of your closing costs is also your HOA fees. So if you have an HOA, usually you're going to have to pay for about 3 months up front. And if there's an HOA transfer fee that wasn't paid for by the seller, you're going to have to add that as well. Another thing that goes in there is as well is your property taxes and interest for the month. So it's kind of weird how it works out. Basically, depending on when you close in the month, your closing costs will either be a little bit higher, a little bit lower. So every time I have a conversation with a client, they say, well, what is closing costs? How much is it? It's really hard to tell you right up front what that dollar amount is. Usually I always tell my clients, look, it could be as low as $4,500. It could be as high as $6,000. Like, just depends. Every situation is very different. But we always find out during our inspection period. If for whatever reason it won't work out, we can cancel during that inspection period. But that's one of the biggest, pains, is that you really can't ever you really don't know, because there's a lot of factors that go into it: title fees, HOA fees, into these quote unquote closing costs. And then the only other thing that usually does come included is the processing fee through the loan. But the lender, the loan officer themselves, they don't get paid out of the closing costs. They get paid when they resell the loan to the bigger bank. That's how they get their compensation. Me as a buyer's agent, I get compensated when the seller sells the house by the seller, or if I'm representing you as a seller, you pay me my commission that way. So that's what's closing costs in general. Now, this is why it's so important, and how much of a factor it plays in negotiating when you have your own closing costs to cover. So whenever we sit down and we talk about potentially your down payment, and that's usually what everybody focuses on. They think, oh, my down payment is this, that's all I have to pay. That could be the case, depending on how long the house has been on the market, depending on how high in demand the house is. Maybe 3 years ago, when it was solely a buyer's market, there wasn't that many sellers, or houses were on the market a little bit longer. Then if a house was just on the market, we had a pretty good shot of getting all your closing costs covered. But nowadays, because inventory is low, interest rates are crazy low, there's a lot of activity. There's a lot of attention on these houses, in $200,000, $250,000, $300,000 price range. Like, there is definitely a lot of people out there buying. So whenever you have an offer that you need to present traditionally, and I say traditionally because this is something that realtors all the time, they say, oh, I'll get your closing costs covered. I'll get your closing costs covered. It depends, because traditionally, that would have been the case 3 years ago. Nowadays, though, the amount of money that you can come out of pocket to cover your own closing costs is going to get you the best deal, or the best possible deal, to get that offer accepted. As a seller, if I'm representing a seller, right, if I'm selling your house and we have multiple offers laid out, regardless of what the price point is on this offer, if they're asking for full closing costs and I have an offer with zero closing costs, I'm going to give this guy the opportunity to increase the purchase price, at least, so that way they can match this other offer. And the reason why that's important is, let's say there's an appraisal and an appraisal is low on the house. And as a seller, we accepted an offer with $5,000 in closing costs, and then the house appraises lower. Now we're stuck dropping the price, and on top of that, we're stuck paying those closing costs. So that's why it's so important as a buyer to try to reduce the amount of money that you're going to ask the seller to cover on your closing costs end. Now, this house, if it's been on the market for 2 weeks, 3 weeks, then this shouldn't really be a conversation. Like, we have a pretty good shot. I would say 90% of the time we'll get those closing costs covered. Okay, but we're talking about houses that just came on the market, and obviously you're looking at them, so are other buyers. So that's why it's real important to try to reduce your closing costs as much as possible. I just had a client recently that I was super excited for them that they were able to get their offer accepted. Berto and Brenda, congratulations again, guys. But the house came on the market. It was actually one of my pick of the days. The agent had like 6-7 offers. One of them was a cash offer. I talked to my clients. I said, hey, look, this is a great house. It has all these points that you guys want. I remember very specifically, I asked Brenda, I said, do you like the house? She says, I don't like it. She's like, I'm in love with it. Like, this is the house. So we had that conversation. I said, all right, if you guys really like this house, we need to come in strong. Let's increase the purchase price, right? Whatever we can, whatever we feel comfortable with. But at the end of the day, you guys got to cover your own closing costs as much as possible. So then we partnered up with the lender. We talked to the lender. How can we be creative? How can we use some of this down payment assistance to cover some of our closing costs? And sure enough, there was an option. We increased our interest rate a little bit so that way we can get more down payment assistance. We ended up getting an additional 1%, but we only needed 3% of that. So then we used that additional 1% to cover half of their closing costs, essentially, and then they're going to come out of pocket with the difference at closing. And they were totally fine with it because it was the right house for them. And that's the key right there. If it's the right house for you and if you love the house, you got to go all in so that you can get your offer accepted. If you need to borrow money, if you need to take out from your 401k, if that's what it takes to get the house that you want, the house that you fell in love with, that's what you got to do. And that's the difficult conversations that agents don't have with other buyers. That's a difficult conversation that agents hate to have with buyers because most of the time the sales pitch is, hey, let's buy a house with down payment assistance. You're not paying anything but your appraisal and your inspection. 3 years ago, maybe. Try that now with a house that just came on the market. You're going to get your offer rejected time after time after time. All right, guys. So that's kind of the short and long, I guess, because it was actually a long one on closing costs. Once again, if you guys are in the market, if you guys are considering buying or selling, interest rates extremely low, give me a call, shoot me a text. We'll get together and we'll come up with a great plan to get you guys home shopping. All right, you guys take care and have a great Friday. Enjoy this decent, mild weather. Take care.